Hello, traders, investors. Welcome back to Mr. Bagel's channel for trading analysis. Today we had a lot to talk about. It was a bloodbath, right? Let's call it what it was. I mean, obviously it was a sea of green just up until Jerome Powell came out to say, hey, we're expecting two cuts in 2025. So now you can't have too many cuts. You can't have too little cuts. I don't know what's the right amount of cuts, but apparently the market didn't like it, right? I think it was just trying to find an excuse to sell, to stop out retail traders. Um, but we need to talk about this because I think I see some problematic things that new traders do, which is they just go on with their trades, and then when volatility event arrived, they would just go over to the VIX to see, okay, this is how we justify the sell. No, that's not how you use the VIX. So every day, whether you're a trader or investors, if more so if you're traders, you need to have the VIX HYG, which is a signal tell you, hey, how's the market perceiving the risk in the market? Are we on, risk on or risk off? Or you also want to look at TLT. You want to see where the yield is, right? You want to see how the bond market is moving. Again, debt market is much larger than equity market. And you also want to have, dollar index, and you want to have SPY, QQQ on your chart. These are the first things that you check every day when you're trading. Now, you don't go, hey, I want to check the VIX because market is already crashing. No, you check the VIX every day. So we already alerted this that VIX was creeping up. It was going to hit 20 days moving average. And then it hit. And then it closed above it. You probably can't see this right now because we have gone up for 70 some percent on the VIX. So right now it doesn't really show it that way. But when I saw it, the VIX was at 18. It found support exactly on the 20 days moving average. Now I knew it was going to go up. I didn't expect this, right? If you took a loss on this session, don't feel bad about it. I think most people did. The most important thing to know is what did we learn from this and where do we go from here? Now, we, of course, talked about the potential weakness in the market on Monday. And how did we know was this is the first time in a long time the VIX closed weekly like this, right? We compressed all the way down on the weekly and then we made higher high and higher low and BX turn. And sure enough, the very next week, which is this week, it went like this. I mean, this is not a good enough of confidence that tells you, hey, this would eventually happen, right? I mean, going up was almost like inevitable, but going up like this, no way you could have seen this. But this is very closely associated with what we saw on S&P. So on the weekly, we already talked about this was the first time in a long time that we had lower high and lower low on the weekly, and with more selling pressure showing on the volume. So is this justified? I mean, yeah, we expected SPY to close red on the week, but nobody was expecting this. Okay, nobody knows. And when you see this kind of sell, um, yeah, you are looking at your portfolio, you're praying that it doesn't crash as much as it did, which was 3%, but it was a very nice short. Okay, I didn't short it, hopefully some of you did, but when you have this kind of situation, kind of movement in the market, you want to go over the smaller time frame, you want to look at if there's any bid. There's no bid, it's a clear short. Okay, so is the tide changing? Where do we go from here? Obviously VIX, very bad close. You should not expect we make another all-time high anytime soon. So what now? Honestly, at this stage, we are waiting for price action, right? Because if we break this level, that's bad. We took out 20 days moving average and 50 days moving average all together in one single session and we close at the low. This is as bad as it gets, okay? Billions of dollars are leaving the market and for good reason. And to make matters worse, Micron crashed after hour. Yeah, this is really bad, guys. I never played the earnings. However, I do still hold on some LRCX. Was making on Micron, made some on R, but LRCX I took some off the table, and the after hour move is getting my position to the red. Okay, so never gamble the earnings, guys. You will feel very good about yourself if you get it right, but you will feel 10 times worse about yourself if you get it wrong. So just don't do it. Um, so right now there's not a lot of read. We don't know where we go from here. We want to see how we close on the week, but I think across all sectors, across all the charts, you're looking at weakness. Remember we talked about the potential short on Home Depot. So this is terrifying. Okay, this is terrifying if you're a massive bull in the market. This is not great if you are alone, because for home builders, obviously we were expecting more cuts for these guys because like Lowe's, Home Depot, these names that are of the highest percentage components in the home builder, when they crash like the way they did, this is not a good sign. Okay, it is risk off for the time being. It's just bad, right? Obviously, you look at JPM and Caterpillar, these Dow components that we've been able to short on the downside. I even took out my JPM. I didn't see this going the way it did. It's really, really bad, right? So for semiconductor investors out there, Micron was bad. We probably want to look at SMH to get a better idea, right? It's just bad, right? Guys, we made a higher high, but I'm not confident that we will be able to hold this trend line. So if you're trading semiconductors, make sure you have your stop, make sure you are hedged. Right now, there's not a lot of read. ARM is still not quite in. Well, hourly is really really bad, but we're still above this major trend line. So if you're holding ARM, have your stop just maybe around like $127, slowly scaling out if we retest on the hourly moving average again, and if we are clearly not taking that level out, just take out your positions or slowly scaling out because this is not looking great, right? So what's the lesson here is that you have to check VIX all the time, right? You can even argue and say this was a double bottom, right? And we actually held the low from the one we had previously. And yeah, so always expect VIX. And I mean, don't even want to try to sell some puts because when volatility event arrives, it can be really bad. It can be really bad. Okay. Um, so what would be the signal for you? I'd say if you see this kind of crash on the VIX, you can comfortably go long in the market for about 4 to 5 weeks, and then you see this, it is time to take a breather. Stay away from the market a little bit. Major event coming up, FOMC can be a catalyst. Just don't trade it. All right. If you have any open position right now, you don't know what to do, leave a comment down below. I will be happy to provide some of my opinions if that helps. And once again, this is not financial advice. I'm just providing you with what I'm seeing in the market. You are trading on your own risk. And right now, things are not looking good. I will not have any pick right now because I want to see the price action in the next session to provide more color and then to show the direction, and then we go from there. Okay, thanks again for tuning in. And if you enjoyed today's content, please make sure you remember to subscribe or like the video. That will really help us move. All right, thanks again. I'll see you tomorrow. Bye now.